Hello everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of August the 7th, 2017. Now, to get started this week, we're going to begin with the labor report. We're coming out of the non-farm payroll. Now, going forward for the US dollar, it immediately did show gains to begin the week. However, what we should be looking at here is the real unemployment rate, which of course is this unemployment rate is the U6 number, the overall labor conditions, how things are looking. We can see that basically we've hit a low at 8.4, but now we're essentially stalling out at 8.6. Now, the headline number was good in this past release on Friday. But again, that number can be revised lower. So in my respectful opinion, it's somewhat US dollar positive, but I don't think it's going to be enough to change the overall trend of the dollar. So from here, guys, we go to the dollar index and the VantagePoint indicators. We can assess here. With the dollar index, you can see we are still holding below that critical VantagePoint 18-day predicted moving average at 93.83. So while we're holding under this level, it is still bearish. We can further assess here that we were in an extreme oversold condition, and as I've said many times, nothing goes straight up and nothing goes straight down. This appears to be a corrective move, not a new trend forming here, guys. Now, once again, we have other indicators here from the VantagePoint. If we look at our short-term crossover, it is to the upside, but the medium and the long-term crossover have not confirmed a trend reversal on the dollar index. So when we look at that and we bring that over to Euro US, the correlation between these two, the inverse correlation is 99.9% inverse correlation. One goes up, one goes down. So that would signal probably a corrective move on the euro. The VantagePoint indicators also confirming that. 116.66, the 18-day predicted moving average, is the key level to watch this week, and in my respectful opinion, that area is likely to hold. So what we would be looking for is a corrective move down to this area, so this overbought condition, as identified by the VantagePoint indicators, can basically correct itself. Once we've worked off this overbought condition, the euro is likely to turn back to the upside for potentially the remainder of the year. Now, with US Swiss franc, again, a high inverse correlation to the euro US and basically a 95% correlation to the dollar index, we can see that we're up against a significant trendline resistance at about 97.50, and despite that good payroll number, or what's interpreted as a decent non-farm payroll, we still didn't get through this area. So this again warns that any dollar strength is probably going to be very short-lived. However, we do have momentum building on this particular pair, and we could see it move higher. What US Swiss franc is very correlated to is the global equity markets. If the global equity markets are moving higher, US Swiss franc is moving higher. But if the global equities turn lower, US Swiss franc will follow it lower. So be very mindful of that going into next week's trade. Now, coming into the British pound US dollar, it's taken a bit of a hit from the Bank of England here, guys, but I don't think the market is going to be overly bearish on this particular pair. Once again, we were in a heavily overbought condition. Once again, as identified by the VantagePoint indicators, we have closed below that critical 130.74 level, but this again is likely this move is likely corrective in nature. The British pound probably going to regain its footing by the end of next week, but the indicators are definitely bearish at the current time. When we look at our short-term crossover, you can see that had already happened after the Bank of England and the non-farm payroll number, but the medium and the long-term crossovers have not completed to the downside. So remember, in the short term, the British pound is weak, but in the medium and the longer term, once again, in my respectful opinion, the British pound is grossly undervalued. The additional indicators, the medium term crossing over the long term predicted difference to the downside, that's a problem. Predicted MACD, but we have not broken below this all important 40 level yet, guys. So keep that in mind. We don't have a lot of downward momentum here. We do have some, but not a lot. Now, as we come into our three main commodity currency, or excuse me, we're going to do US Japan first. US Japan, despite everything with the rate hikes and everything else, the yen has still continued to strengthen against the US dollar. Once again, this is an equity-based trade. Predominantly, the yen is very strong in the month of August in thin, illiquid markets, so also keep this in mind. But for now, the main thing I want to point out to everybody is we have, despite some of the positive US data, we still have not broken above 111.24. So only a sustained break of this level next week will actually take the pressure off the downside, and you can see the additional indicators from VantagePoint are not falling for it. They are saying that this predominantly is still a short. We're just again in an oversold condition, and once that oversold condition is worked off, it's likely to continue moving lower like it's been doing for the last several weeks. Probably one could even say the last several months. Now, as we come into those three main commodity currencies, USCAD, we could have some opportunity for longs. US Canada, VantagePoint's original signal here, a very powerful one, going all the way back into May when VantagePoint had us getting short the US Canada. We've had multiple retracements here, and on each retracement to this key VantagePoint 18-day predicted moving average, we have failed. Now, we've also failed even for today. Friday, excuse me, the Canadian unemployment report was not too bad here, guys. Not too bad at all. So that may help the Canadian dollar. So this move to the upside could be corrective in nature also, but we must hold above 126.26, stay above this area. What I want to point out is there is a civic holiday on Monday in Canada, so focus your trading on US Canada Tuesday, Wednesday, Thursday. Be very cautious on Monday because the Canadian banks are closed. The end of day Tuesday, we'll have a better idea, but this is the key level to watch. Can the market close above 126.26 for several days in a row? I am not at all convinced at this particular time that's going to happen, but I think it is likely, is where I will leave that. Now, when we look at those individual crossovers, short term is up, medium term is up, and the long term, this could be a trend change. It is entirely possible with a lot of activity around 125.50. So 125.50 on the downside, that's the area to watch. If we can continue to hold above this area and stay above that 126.30 area, then USCAD has a real shot of correcting higher, potentially back up into the 130 area. Now, when we look at Aussie US and New Zealand US, guys, almost the exact same trade. So be careful. They are both sitting on the key VantagePoint 18-day predicted moving average. Aussie US is sitting at 78.87, and New Zealand US is actually has been sitting on the key VantagePoint 18-day predicted moving average at 74.07 for 3 days in a row, and we still couldn't close below this area to finish the week. So these two currencies, the Aussie and the New Zealand, I believe that they are in the process of a broader trend change to the upside. So in this particular case, we're simply looking for the market to work off the overbought condition on both Aussie US and New Zealand US and look for buying opportunities. That may happen later in the latter part of this week, but really for these two pairs, September is the bigger focus because again, we're going into the summer trade. August is probably one of the worst trading months, only next to December. So we basically position ourselves for September here, but I think there is going to be some very good opportunities for longs on both of these two pairs.